Over the past 3 months, Snap has taken investors on a roller coaster ride. Starting at 8.69 in late June, the stock experienced a sharp decline, bottoming out at 6.99 by late August. However, it didn't stay down for long. By late September, Snap had rebounded to 8.27, showing signs of recovery. Despite this bounce, the stock remains in a consolidation phase, struggling to regain its June high. This period has been marked by volatility, with both sharp drops and quick recoveries, leaving the overall trend neutral but with a slightly bearish undertone. The journey so far sets the stage for a closer look at what's driving these moves. August was a turning point for Snap. The stock saw a significant technical breakdown, with prices collapsing rapidly. This decline was not just a minor dip, it represented a major shift in sentiment and market dynamics. The sharp fall to 6.99 caught many investors off guard, highlighting the risks of sudden market moves. However, this breakdown also set the stage for a potential recovery, as the stock began to attract attention from bargain hunters and those looking for a turnaround. Understanding this breakdown is crucial for grasping the current technical setup and the challenges Snap faces moving forward. For the steep decline in August, Snap managed to stage a partial recovery in September. The price climbed back to 8.27, reclaiming some lost ground. This rebound was fueled by renewed buying interest and a shift in market sentiment. However, the recovery was not enough to fully erase the earlier losses, and the stock remained below its June levels. The September bounce demonstrated Snap's resilience but also underscored the challenges ahead. The stock's ability to recover from lows is a positive sign, but sustained momentum will be needed to break through key resistance levels. Currently, Snap is in a consolidation phase. This means the stock is trading within a relatively narrow range as buyers and sellers battle for control. Consolidation often follows periods of high volatility, giving the market time to digest recent moves and set the stage for the next trend. For Snap, this phase is marked by uncertainty, with neither bulls nor bears in clear control. The stock's inability to break above its June highs or fall back to August lows suggests that investors are waiting for a clearer signal before making their next move. Volume tells a story of its own. During the August decline, Snap saw significant distribution, with a massive 185 million shares traded on August 6 as the price collapsed to 7.78. This spike in volume signaled heavy selling pressure. In contrast, the recovery in September was accompanied by improving volume, with 202 million shares traded on September 18 as the price climbed to 8.44. The most recent session closed with 157 million shares, reflecting ongoing interest. These volume patterns highlight the stock's transitional phase, with mixed signals about future direction. Volume spikes during the August downturn indicated strong distribution, as sellers dominated the market. However, the September recovery brought signs of accumulation, with buyers stepping in at lower prices. This shift from distribution to accumulation is a classic sign of a market in transition. It suggests that while some investors were eager to exit during the decline, others saw value and began to build position. The interplay between these forces will be key in determining Snap's next move, as the stock navigates between potential reversal and continued consolidation. Looking at the moving averages, Snap's short-term indicators show some improvement. The 5-day simple moving average SMA sits at 8.354, while the 10-day SMA is at 8.156. Both are close to the current price, suggesting that the stock is trying to stabilize. These short-term averages often act as support or resistance, guiding traders' decisions. When prices hover near these averages, it often signals a period of indecision as the market waits for a catalyst to drive the next move. For Snap, the short-term picture is cautiously optimistic, but confirmation is needed. Medium-term moving averages such as the 20-day SMA at 7.693 and the 50-day SMA at 8.0428 are currently below the price, indicating some upward momentum. However, the long-term 200-day SMA at 9.1868 remains above the current price, signaling that Snap is still in a longer-term downtrend. This mixed picture reflects the stock's transitional phase, where short-term improvements are offset by longer-term challenges. Traders often look for the price to cross above the 200-day average as a sign of a true reversal, so this level will be important to watch. Exponential moving averages (EMAs) provide a similar mixed signal. The 5-day EMA is at 8.271, very close to the current price, while the 200-day EMA stands at 9.2433, still well above. EMAs react more quickly to price changes than simple moving averages, making them useful for spotting early shifts in momentum. The fact that short-term EMAs are near the price while long-term EMAs remain higher reinforces the idea that Snap is in a transitional phase, with potential for either a sustained recovery or renewed weakness. Relative Strength Index (RSI) is a popular momentum indicator. For Snap, the 14-day RSI stands at 58.43, which is considered neutral but with a slight bullish bias. RSI values between 30 and 70 typically indicate a balanced market, while readings above 70 suggest overbought conditions and below 30 indicate oversold. Snap's current RSI suggests that the stock is neither overbought nor oversold, but there is a hint of upward momentum. This neutral reading aligns with the overall technical picture of cautious optimism. Moving Average Convergence Divergence (MACD) indicator is showing signs of improving bullish momentum for Snap. With the MACD at 0.1875 and the signal line at 0.0654, the positive histogram value of 0.122 confirms this trend. A Positive MACD and histogram suggest that the stock's short-term momentum is turning upward, which could attract more buyers if the trend continues. However, as with all technical indicators, confirmation from price action is essential before making any trading decisions. Stochastic oscillators help identify overbought and oversold conditions. For Snap, the stock K15 is at 59.13 and stock D15 at 70.89, both in neutral territory. These readings suggest that the stock is not currently at an extreme, supporting the idea of a balanced market. Stochastic indicators are particularly useful for spotting potential turning points, but in this case, they reinforce the message of consolidation and indecision. Commodity Channel Index, CCI, at 72.96 confirms bullish momentum, while the Williams percent R at minus 44.99 indicates moderate trend strength. These indicators add nuance to the technical picture, suggesting that while there is some upward momentum, it is not yet strong enough to signal a clear breakout. Together, they highlight the importance of monitoring multiple indicators to get a comprehensive view of the market. Average Directional Index, ADX, at 28.74 points to moderate trend strength, while the Arun oscillator shows mixed signals with Arun up at 84 and Arun down at 28. These readings suggest that while there is some trend in place, it is not particularly strong or decisive. The mixed signals from the Arun oscillator further reinforce the idea that Snap is in a transitional phase, with the market still searching for direction. Linear regression analysis provides another perspective on Snap's recent performance. The negative slope of minus 0.0365 confirms the recent downtrend, while the regression intercept at 9.5182 highlights how far the stock has fallen from its mean level. The R-squared value of 0.4134 indicates a moderate correlation between time and price decline. Interestingly, the current price of 8.27 is above the regression predicted value of 7.1448, suggesting that Snap is trading above its expected level and showing some recovery from the downtrend. The deviation between Snap's current price and its regression predicted value is 1.1252, or about 15.75%. This significant gap indicates that the stock has managed to recover more than what the regression model would have expected, at least in the short term. Such deviations can signal either the start of a new trend or a temporary overreaction, making it important for traders to monitor whether the price can sustain these levels or revert back toward the mean. Based on the current technical setup, Snap's next trading day is projected to open between 8.2 and 8.35. The improving MACD and neutral RSI suggest there is potential for modest upward movement. However, the recent consolidation near current levels indicates a balanced market, with equal chances for both upside and downside moves. Traders should be prepared for intraday volatility, as mixed technical signals could lead to sharp swings in either direction. Key resistance levels for Snap are identified at 8.4, 8.6, and 8.8. With the current price at 8.27, the stock is approaching its first resistance. Resistance levels act as barriers where selling pressure may increase, making it harder for the price to move higher. If Snap can break through these levels, it could signal the start of a new uptrend. However, failure to do so could result in a pullback as sellers take control. The downside, Snap has support levels at 8, 7.8, and 7.6. Support acts as a floor where buying interest may increase, helping to prevent further declines. The stock's distance from these key supports suggests moderate vulnerability to pullbacks if resistance holds. Watching how Snap reacts near these levels will provide important clues about future direction and the strength of buyer interest. Average True Range, ATR, is a key measure of volatility. For Snap, the 14-day ATR stands at 0.3762, indicating moderate volatility. This means that traders can expect price swings of around 0.38 per session on average. The ATR helps set expectations for how much the stock might move in a typical day, which is especially useful for planning trades and managing risk. Based on the ATR, the projected high for Snap's next session is 8.6462, while the projected low is 7.8938. This range provides reasonable parameters for intraday trading expectations. It reflects the stock's recent consolidation phase but also leaves room for expansion if a breakout or breakdown occurs. Traders should use these levels as reference points when planning their strategies. First possible scenario for Snap is a breakout above the 8.4 resistance level. If this occurs, the stock could accelerate toward 8.6 and potentially 8.8. Breakouts often attract momentum traders and can lead to rapid price advances. However, confirmation is needed, as false breakouts are common in consolidating markets. Watching for strong volume and follow-through buying will be key to validating this scenario. Second scenario is continued consolidation between 8 and 8.4. In this case, the market remains undecided, with prices oscillating within a defined range. This scenario is likely if neither buyers nor sellers gain a decisive advantage. Consolidation can be frustrating for traders seeking quick moves, but it often precedes significant breakouts or breakdowns. Patience is required as the market builds energy for its next move. Third scenario involves a pullback to the 8 support level if resistance holds. This would test the strength of the recent recovery and could lead to further declines if buyers fail to step in. Pullbacks are a normal part of market cycles and can provide buying opportunities for those looking to enter at lower prices. However, a break below support could signal renewed weakness and a return to the downtrend. Given the mixed technical signals, the most probable scenario for Snap is continued consolidation with a slight bullish bias. The stock is likely to remain range-bound as the market digests recent moves and waits for a clearer signal. However, the improving momentum indicators suggest that an eventual upside breakout is possible if buying interest persists. Traders should remain flexible and ready to adapt as new information emerges. Investors, Snap's current technical profile calls for caution. The stock has shown resilience in recovering from its August lows, but significant resistance remains overhead. Technical indicators are improving, but confirmation is needed before committing capital. Monitoring key resistance and support levels will be crucial for managing risk and identifying potential opportunities. A cautious approach is warranted until a clear directional move is confirmed. Snap's technical setup presents both risk and opportunity. On the one hand, the potential for an upside breakout offers attractive rewards for those willing to take on risk. On the other hand, failure to break resistance could lead to renewed declines. Balancing these factors requires discipline and a clear trading plan. Investors should be prepared for both outcomes and manage their positions accordingly. Technical analysis: confirmation is everything. Snap's improving indicators are encouraging, but a decisive move above resistance or below support is needed to confirm the next trend. Until then, traders should remain patient and avoid making large bets based on incomplete signals. Waiting for confirmation can help avoid costly mistakes and improve the odds of success. 8.4 resistance level is especially important for Snap. A breakout above this level would signal a potential shift in momentum and could attract additional buyers. Conversely, a failure to break through could lead to a retest of support levels. Keeping a close eye on these key levels will help traders stay ahead of the market and respond quickly to new developments. Summary: Snap is at a crossroads. The stock has shown signs of recovery but remains below key resistance levels. Technical indicators suggest improving momentum, but confirmation is still needed for a sustained move higher. Investors should approach with caution, watching for clear signals before making major decisions. The coming sessions will be critical in determining whether Snap can build on its recent gains or faces renewed challenges. Stay tuned as the story unfolds.